Welcome back, Alpha Hunters. The markets are closed for the week of July the 19th. All right, so let's talk about what went on this week. Basically, kind of continued how last week basically kind of ended. Monday, a little bit of a gap up there on Monday. People trying to buy the dip, trying to be optimistic. It's worked like 1,000 times before. Why wouldn't it work again this time? People are going to continue to do it for a good amount of time. So just expect to kind of see pumps here come in here every now and then. But we did have a little bit of a gap up there. Nice run into kind of the early middle part of the day. And then a nice little pullback for a good period of time. Didn't quite get negative there as we go kind of into the afternoon trading. Nice little bounce. And then we kind of rolled over pretty sharply there into the close. Quick bounce after snagging the basically going negative briefly there in the last little bits and then bouncing. That's kind of the way Monday was. Tuesday, nice little gap up. Kind of a flat day for a good part of it, intraday trading wise, but just mostly that gap up. And then we had a nice little run there at the end of the day. And then we got the gap down. Wednesday, we got the gap down. Now, there was probably two things that you could say, oh, this is why we gapped down that much. The two things were the Biden administration kind of mentioned more kind of semiconductor regulation about sending stuff to China and that kind of stuff. So obviously, that's not good. So tech kind of sold off there quite a bit there on Wednesday. There was also ASML that had earnings kind of overnight. They're a European company. They had earnings and they kind of gapped down like I think 8% or so. But that also sent semiconductors kind of trading down as well. And it just, both of those things combined, I think the ASML news was a big deal because they lowered forecast. And obviously, when it's supposed to be a huge growth area going on right now in semiconductor world, and you have one company come out and say, yeah, maybe we're not growing as fast as we thought we were going to be. Obviously, that raised some eyebrows, and people took the opportunity to continue to lock in profits on big time gains in a lot of semiconductor areas. So we had a nice little gap down. Kind of didn't trade horribly bearish throughout the day, just kind of like a kind of steady downtrend there for the first half of the day, and just kind of tried to base out here in the second half of the day, trying to flatten out. But did end towards the session lows. And then we gapped up on Thursday, tried to bounce, and then it just rejected, rolled over there in the first hour. And yeah, that was kind of like game on, sell city, right? And we just kind of saw that drop there first half of the day on Thursday. Bounce, rolled over again, tried to bounce there on the close. And then Friday kind of took over where we kind of left off, kind of just rolled over, tried to bounce a couple times, just kept kind of rolling over. Kind of ended at the session lows. I was kind of surprised we ended as weak as we did there to end out the week on Friday. But I'll show you why I'm also not totally shocked. I'm just surprised that we ended as low as we did. I thought we had a little bit more of a bounce, but we definitely just kind of did not there. So taking a look at sector performance throughout the week. And yeah, we can see Tech XLK, got hit pretty good. You can see really got hit there on Wednesday, Thursday, Friday, just kind of continued. Didn't never really got the bounce back. And everything else actually outperformed this week. Discretionaries slightly outperformed, utilities outperformed, communications outperformed, materials, healthcare all outperformed. All those were negative on the week, but they outperformed the market. All the other sectors, industrial, staples, financials, real estate, energies, they were actually all positive there for the week. So pretty good, performance there for a lot of those sectors on the week. And I want to take another quick look at really since last Thursday's open, last Thursday being July 11th, and kind of the market performance since then, or kind of sector performance since then. Because if you remember last Thursday, that is when the Qs and tech topped out last Thursday morning. So you can see tech last Thursday sold off pretty sharply. We kind of talked about that last week. Nice little bounce back. But you see how tech kind of lagged behind here Friday, Monday, and Tuesday. And this is when the market actually was making new highs Monday and Tuesday, right? Intraday highs. Even Tuesday there on the close was pretty good close. But that gap down that we got on Wednesday, you couldn't really hide it anymore. Tech was breaking down, no longer making new highs. We had that little switch, right, where The SPY kept making new highs. The Qs were no longer making new highs. So you had that change in leadership. And whenever you see that, typically in the market, where the sectors that have been leading or, continuing the trend, in this case, for much of the past couple of years, it's been tech. Whenever they stop leading and you get the change in leadership and the Qs no longer continues to make new all-time highs, and you get the SPY that continues to make new all-time highs or new trend highs, and the tech world, the Qs, is no longer doing it. That's when you get that switch, and that's when you start to get probably some more selling that'll come in afterwards. You start to get some more significant breakdowns, and you can see communications discretionary is still kind of underperforming the SPY over the past like 7 trading days. Utilities, healthcare, materials, staples, industrials, financials, real estate, energy, everything else is positive. It's the tech heavy sectors, and especially tech specifically, that are underperforming in negative in a big way. And a lot of that's, tech, XLK. And just taking a real quick look at the heat map for the week, this is the week performance. You can see a lot of red over here, just the big boxes. The big boxes are all red. A lot of other stuff is actually not too bad. There's a lot of green actually out there on the week. So even financials doing pretty good. Manufacturing, there's a lot of semiconductor manufacturing companies in here, so they obviously not doing too well. But there's a lot of green out there in a lot of the other sectors. It's just the big tech, big boxes here that is really weighing on the market. And I know we'll talk about the kind of game plan going forward towards the end. But you notice here on the Qs, we're not breaking this low quite yet. This low from June 24th. We're not quite breaking it. We're getting down to it, but not quite there. But if you look at the XLK, well, one thing you'll notice then on Thursdays, we actually did break that low. We did hit that 50 EMA. We did bounce, but then we broke it down on Friday. So if the XLK is reversing this hard, you got to ask yourself, where are we going to continue to go higher from on the SPY and the Qs? And what has the weighting to do that? I don't know, guys. I couldn't tell you that answer. There would have to be a lot of capital flow into the other stocks, because the XLK has that much weighting. So we probably do see quite a bit more of a pullback here going forward. But take a look at the VIX. We talked about it last week. We kind of talked about it early this week. We're getting really tight in here, getting some lower highs, getting some compression coming in here over the past 2 months, and we just started curving up this week at the start of the week, and we just kind of exploded higher. The question was where we were going to stop. Were we going to stop kind of at the top here late May, or were we going to make a run to some higher levels? Well, Thursday, we kind of put that to rest. We kind of smashed through some levels there on Thursday. So we did wind up making a run up to about 17 levels. So we'll be curious to see if that's kind of where we stop. Man, I don't know. It'll be interesting. I do want to see how maybe the VIX sets up going forward. DXY, dollar index. Oof. We had a pretty strong breakdown this week. We broke this 104 level that had been a pretty good support for a while. We were holding it, last week, even to start the week. And then we had that breakdown Wednesday. And I said, okay, I want to see how the week closes. We had that bounce back day Thursday, and then Friday just kind of continued. It looks pretty iffy right now. Was it just a quick bounce back and then we're just going to roll back over? Other people are going to say this is a false breakdown, look to go bullish. I'm going to say it's going to depend here on the next couple of days. Early parts of next week, if we can consolidate sideways 1 or 2 days, to me, that would be, if we pop above the 10 EMA, I would just go bullish. I would go bullish on the dollar and the DXY. So if we don't do that, I would be looking for probably a breakdown back below 104. If we do get the breakdown and hold back below 104, I think that's probably going to be, probably a good sign to just be bearish. So that'll be what I'm looking for. I want to see some sideways consolidation, and then which way do we wind up going? If we wind up just, this was the quick snapback retest, and then we break back down, we get back below 104 again, I'd just be bearish. But that's kind of the way I'm looking at it right now. So if we get some sideways consolidation here Monday, Tuesday, I think if you get a bullish pop, I think you're just playing that bullish. GLD Gold Trust. Okay. So we had pretty good move to start the week, all-time highs, and then we came back down. Obviously, people are going to say it's a false breakout. I mean, this also could be just a pullback, quick little pullback, so it's going to be interesting. I'm going to stick by what I've kind of just been saying for a while. I'd rather just be bullish on gold on any kind of pullbacks. If you like the move that we did have to start July and you're wanting to get in on kind of a breakout kind of a move, or you wanted the pullback, I think you're just kind of dipping into it. I dig gold. I think as long as you're not super leveraged on it, because it can definitely move. I think you're just buying dips. That's just kind of my opinion on it. 10-year yield, another one, kind of like a false breakdown this week. With what happened last weekend, as far as like Trump assassination, we did have a little bit of a higher hoping on yields, and we did have the continuation of a breakdown that we were having over the 2 previous weeks, but it did not hold. We wound up getting back above. So much like the dollar, I want to see how this thing sets up. We did close above the 10 EMA on the yields, on the 10-year yield at least. So I do want to see how this thing sets up, maybe Monday and Tuesday. And that's about all I'll say. I want to see how this thing kind of sets up. If we do get some sideways consolidation and then we pop higher, I think you're probably just going to be looking to be bearish on bonds, but I'd be watching yields. I also do think that they'll probably just be more choppy than anything else. So if we do get a pretty good move here for the next couple of weeks, I think yields will come back down again. So I just think we're just in a choppy zone for now. Taking a look at that 10 and 2 inversion. Yeah, I got that pretty good gap up to start the week. Came back down on a retest. Yeah, we'll have to see. I mean, this could just been a retest. Maybe we continue higher here going forward. But yeah, I mean, we had a pretty good move here from kind of like the end of June there to the middle of July. Nice little higher move. So we might just set up a little sideways consolidation and continue higher later on. But other than that, I mean, we're not pushing back into the zero line yet, but we are moving in that direction. At least that's the trend now, going in that direction. So yeah, we'll just have to wait and see. HYG, this guy, kind of mentioned it last week, what we talked about this week on a live stream. Need to see this thing break this December high. Yes, but I need to see it also get above 78.50. I need to see that move all the way up to 78.50. So we actually did break that December high on Tuesday. We saw a very nice bullish move, looking good. But as I said, I need to see this thing get above 78.50 to make sure that that breakout is going to be legit. It needs to be legit. And it did not do that. Okay. Wednesday, we gapped down, we traded higher, but we did not get back to the high of Tuesday, right? We just did not get back there. Thursday, a little bit of a higher open, but we just sold right down. Friday, a little bit of a higher open, sold right down. Coming right down to that 10 EMA. So if it can base here on top of these other previous lows or previous highs for the year, that's kind of where it is, on top of the 10 on EMA, the moving averages that are coming up. If it can kind of just base here for maybe the first half of this next week and then start to curl up, I would like that bullish if we get it. That's if we get it. But if we go sideways, maybe like Monday and then Tuesday we break down, I think you're going to hop on bearish. I think you're going to hop on bearish kind of aggressively, and I think you'll probably just want to smash them down, which that kind of coincides with what we were talking about with yields. If they consolidate and then they pop bullish on the yield side, you'll see the bonds or drop off bearish. So that's what I'm looking for. I'm kind of leaning that I think what will happen is we'll consolidate maybe a day or two on the yields and bonds, and then we will have probably a bearish move on bonds and a bullish move there on yields. So that's what I think will happen. Be curious to see if that does happen, because you laid out 2 scenarios where you can go bullish or bearish. It just kind of depends on what yields wind up doing. And taking a look at the LQD, they were not basing, but they were looking pretty good with this consolidation above these like new trending high. Moving averages come up, and then this little breakdown like Thursday, kind of more Friday here. So I mean, we do have a little bit of a range here, and it's also there on the TLT. We got a little bit of a higher trending channel. So if it comes back down to the lower end of the channel, obviously you're gonna get some support off the lower end of the channel. So if we do wind up breaking down, you probably look to be bullish off of that, at least until we break that down. But as for now, it doesn't look good, especially the way we ended the week. Yeah, TLT, kind of the same thing. The TLT is a little bit worse, okay? And a big reason why is they did not make a new trend high. We actually made a lower high. So, yeah, this next week's going to be really important for the the TLT here, some of these bonds, because with that lower high coming in, definitely sets up a scenario of maybe we are going to chop around a little bit more and set up, maybe a multi-month, maybe rollover breakdown scenario. So I'll be curious to see if, really how we do on bonds and yields here over the next week to two. Because if it doesn't look good and we start to break down on bonds, then yeah, that might be the direction. So we'll just have to just wait and see. But it doesn't look good, especially the way we ended the week. All right, take a real quick look at the IYT transportation ETF. This is something I've been keeping an eye on. I haven't really been keeping it in the weekly market outlook videos, mostly because it hasn't really been moving all that much, but over the past like 2 weeks, it really has started moving. Look at this crazy move. And it looks like kind of like the IWM, RSP. So yeah, it definitely has been moving. I just wanted to call attention to it because we either have a huge breakout and a rapid retest back into the previous highs that we had kind of put in over the previous month. That's basically what we did with that little lower wick on Friday. I dig buying it. I honestly, I do, because I like that look. I like the rapid retest. But the other thing I'll say is, you could have a stop loss down below, because if that bounce doesn't hold, we're gonna come smashing right down through with some ferocity, and it's one that you could definitely flip the position rather quickly. So IYT transportation ETF, you always want to see that going with the market, and especially bullish with the economy. It kind of just gives you that understanding of what the economy is doing. But yeah, it was a crazy move there for a few days, and then reverse that crazy move even quicker. And take a look at the RSP. Kind of just talked about it. Yeah, strong move last week, even the beginning part of this week, and then they got hit pretty good. We were seeing some selling already in big tech world, and then yeah, you see the RSP just kind of came smashing back down. So either there's a retest into previous highs, and we're gonna continue to go higher, especially with the moving averages kind of coming up, or they might just chop a little bit and then break down as the kind of got to break through the resistance that you have now established, or support, I guess in this case, support and resistance zones. So yeah, it'd be interesting to see kind of how that goes. But I dig buying it, honestly. If people are flowing out of tech, they're going to go into something, and why not the other stocks, right? And a lot of them haven't been performing. A lot of discounts out there, a lot of safe spots to kind of go. So yeah, I dig it. I dig getting into a lot of the other stocks. The DIA hasn't quite pulled all the way back into some of its previous highs yet. It's gotten close, so maybe we do see the DIA make some quick sell-offs maybe early this next week, and then look to bounce. So okay, maybe we do go a little bit lower on the DIA, but same kind of deal. We had a pretty strong move higher. We got some higher highs, higher lows kind of coming in. Nice little acceleration here over the past 2 weeks. Quick pullback kind of end out this week. I'd expect a little bit of a lower move maybe to start this next week, and then you're probably just going to be looking to be bullish on it. IWM, same thing, way more rapid. This kind of looks like the IYT, where you just had to like monster days, just back to back to back to back. And then we've gotten some quick retests. Now the IWM, in my opinion, probably comes a little bit lower, maybe back down into like the 210 or so range, 208 or so. I would like it a lot down there. It makes a lot of sense. It's pretty clear. It's pretty obvious right off of these highs. Maybe it comes all the way down to like 206, 211, maybe down to like 205, 206. Yeah, I think all that will be kind of a buy zone, and we'll just see what we get at that point in time. I would dig that a lot. And the Qs. So we briefly talked about the Qs. We did not quite break this low from June the 24th, but we got really close there on Friday. And we're almost there to the 50 EMA. Now I'm going to turn on the long terms, because they're going to start to be relevant, especially if we be breaking that 50 EMA. And you kind of notice we got, a move maybe down to mid 450s. If we wind up breaking the 50 EMA, we won't. I'm going to tell you right now, we're not going to break it, on Monday. Unless something really bad happens, we're not going to break that. So, I mean, we've had a pretty good quick sell-off over the previous few trading days. I'd imagine we have like some support by the dip kind of mentality. And, one of the things that we might actually wind up doing, get a quick sell, come down, break this low that we put in back on June 24th, hit right off that 50 EMA, bounce, maybe come up to this level, kind of chop around a little bit, maybe the moving averages, blah, blah, blah. Do all that stuff. And then we do this, something like that, right? You get this nice looking head and shoulders pattern. Man. So we'll see if we get that. You always got a plan for different scenarios, but man, if we saw that happen, could you imagine how many people would be putting that on social media? Yeah, probably a lot. Anyways, as for now, I think tech might continue to get hit, mostly because what we just looked at a little bit earlier in the video, the XLK, getting hit pretty good. They're already breaking this, base down from late June. I could see Qs continue to get hit. I just don't think we're going to be as bearish this next week as kind of we have been over the previous 7 trading. And the SPY, kind of like we talked about earlier in the video, SPY has been holding pretty good. A lot of it's because, capital that's been coming out of tech has been really going into the other non-tech, or at least non-big tech companies. It's been a lot of diversification going on, rebalancing, a lot of that stuff. So, not to say that the SPY won't go lower if tech goes lower. Obviously, they will because that's the weighting. And we'll just have to see what levels we get to. But the thing that you kind of just need to be aware of is we just broke the 20 EMA. We're not close to the 50 EMA. So we have a pretty good room to kind of drop here. So don't be shocked if we continue to kind of drop off, especially if RSP continues to pull back. Maybe Qs also, along with big tech, continue to pull back some more. SPY could continue to see some downside. So, we're not in a period of time here where, hey, you know what, we're about to drop 10% on the market. But kind of what I've been talking about over the past couple of weeks, it is time to be locking up some significant gains that if you've had it in the tech area, you got to be locking it up, man. You got to lock it up. These things are not going to run like this forever. And if it's been painful, some of these pullbacks that you've had here over the past 7 days or so, lock it up. Take some gains, take some winners, rebalance your portfolio, enjoy it, sell some covered calls, collect the cash flow, that kind of stuff. Alpha owners, have a great weekend. Take care.